So before we talk about what should we do today when market crash, or what should you do, for example, if you already invest in a stock, but the market crashed the next day, what should you do? So before we talk about the solutions, first I want to tell you something. The market is always going up and down. Have no illusions that the market is always going a straight line up like this. This is not how market works. How market works, it is like this. It goes up and down, up and down, up and down, up and down. But with times goes by, the trend is going up. But don't expect that it will go up like a straight line. It won't. But it will go up slowly, up and down. But in the long term, it will still go up. Let's look at the real data of the stock market. See, in the short term, it will go up and down, up and down, up and down, up and down. This is just how market works. But in the long term, it is always going up. In the long term, the stock market will always goes up. But in the short term, it will goes up and down. In the long term, it will always goes up. So this is the 3 months stock market performance, which is quite volatile. It goes up and down. But in the long term, if we look at 5 years, it is always going up. And if we look at the 10 years, it is still going up. So here's the key. Don't expect market will go up like this. It won't. But it will though. It's go up slowly. Goes up and down, up and down. With times goes by, it will go up. So what should you do today when market crash? What should you do today? For example, the value of your investment dropped 20%. There's two things you can do. The first thing is, like I said, the market is always going to go up in the long term. So the first thing you can do, obviously, is to hold on your investment. Don't sell out. Don't panic sell. Never panic sell your stock. Never panic sell your investments. Don't sell just because of the fear it is going to go down more. Don't do that. So what you can do, the first thing is to hold into your investments and wait time to go by, and then the stock recover. Your investment will recover. It will recover eventually. That is just how market works. Up and down, but in the long term, it goes up. So the first thing you can do is to hold on your investment and don't panic sell. The second thing you can do is what we call cost averaging. So what is cost averaging? Let me make you an example real quick. So for example, if today you buy one share of Facebook, for $1. Okay, so you buy one share of Facebook for $1. But the next day, market crash, and it crashed for 50%. A very scary number, it crashed 50%. For example, like last year, COVID, market crash, it crashed around 30 to 40%. So let's make an example today. If you buy Facebook for $1, but the next day it crashed for 50%. So what should you do? Like I said in the beginning, the first thing you can do is obviously to hold on your investments, because eventually it will recover. That's the first thing you can do. Second thing you can do, however, is cost averaging, which is we buy when it dropped. For example, you buy at $1, but it dropped 50%. So it become 50 cents per share now. So you buy it while it's at low price, you buy it. So instead of your share is $1, so now you have two shares with a average price of 75 cents, right? One share here, one share here. $1, 50 cents, middle is 75 cents. So when the market recover, and it will recover, when the market recover to here, for example, say 1 year later, and market recover and it become $2, right? So who will earn more? Is it the $1 people, or when you buy at low price with 75 cents? Of course, it's 75 cents, right? $2 minus 75 cents, which is more profit than $2 minus $1. So to conclude, what you can do when a market crash is come back to two things. First is to hold. And the second is cost averaging. Cost averaging, in other words, in a simple term, which is buy while it's at a low price, which is this one. So again, what you can do when the market crash, don't panic sell, Don't follow the market to just throw your share at a dirt cheap price. Instead, you can do two things. First, you hold into your investment and wait for the market to recover, because it will recover. And the second thing you can do is you buy while it's at low price, and you can get an average price with a lower average. So when the market does recover, you can have more profit. So that is cost averaging. And that's the two things you can do when the market crash. And remember, don't panic sell and don't follow the crowd.